Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Thursday, it is April the 20th, and today we are going nuclear. And not in a bad way, in a good way. I'm going to take a little bit of a look here at nuclear and talk about a couple of ways in which you could possibly get into the nuclear action should you wish to do so. Now, just as for the sake of transparency, I will tell you that I've been invested in uranium probably now for just over 2 years. It's been a couple of hits and misses. What I did originally is I opened a few positions in some small cap uranium stocks. They bounced quite high, quite quickly. In fact, a number of them exceeded 100% return on investment. So I sold half of it and basically took my cash that I had invested off the table and kept the remainder of the stock and thought, oh, well, I'll just see what happens and see where it goes. I would have expected uranium to have spiked by now. It's currently the spot price around $50. I would have expected uranium to be closer to, sort of $100. But these are not things we can control. So let's take a quick look here. So as I just said, the spot price is around $50. Now, here's some news, right? The reactor achieves criticality when the nuclear fission reaction becomes self-sustaining. This criticality, once it's achieved, is necessary to continue the startup of the unit to generate sufficient heat for the electricity production. Now, here's the news, right? So the Georgia Power, that's a company in Georgia in the United States, is Vogtle. I'm not sure how you say that. VOGTLE, Vogtle, Unit 3 in service by May or June of 2023, right? So it's April now. So by next month or June, Georgia Power expects it, Vogtle Unit 3, to be in service and able to produce clean and emission-free energy for the next 60 to 80 years, said Paul Bowers, who's the CEO. Scott Burnell added that this is the first nuclear reactor to achieve initial criticality in the United States anyway, since May 2016. So it's the first time in 7 years that the United States actually has a nuclear reactor that is achieving criticality. Now, uranium, in case you don't know it, and as I said at the beginning, I'm going to give you a couple of ways in which you could possibly invest in uranium, should you be interested. One of the largest uranium miners on the planet is Cameco. Cameco is a Canadian company, and it's probably well known to most uranium investors, and perhaps only second to Kazatomprom, or however you say that very, very fancy, complicated word. Uranium is the most widely used fuel by nuclear power plants, which is kind of stating the obvious. And Cameco is a Canadian company that operates mines in Canada, the United States, and Kazakhstan. The business is backed, and this is the sweet deal about uranium, by long-term contracts. So you don't have this incredible volatility that you have with typical energy companies like Occidental Petroleum, right? When they were printing money hand over fist when the price of WTI was $130 per barrel, and they should have paid off all their debt and returned money to shareholders and done some share buybacks and possibly increase their production or maybe decrease the production to keep the price high. Anyway, they should have made merry when it was $130, and now they're kind of like, because it's $80, right? So they're doing okay, but not like they did when it was $130 a barrel. The uranium guys do not have this type of a problem because the business, the sales of uranium, is backed by long-term contracts with customers around the world, averaging 21 million pounds per year. This is Cameco per year over the next 5 years in sales, right? Long-term contracts. So I'm not sure if 5 years necessarily indicates the long-term contract period that's most commonly used. I think it's more like 10, but it doesn't matter. So Cameco, other than mining uranium, Cameco also provides fuel services to nuclear power plants. And in 2022, its revenue grew by 27%, despite the fact that the uranium price did not take off like many people, including yours truly, expected it to do. Cameco is headquartered in Saskatoon, in Saskatchewan, in Canada. The only other thing that you get from Saskatchewan in Canada is grain, right? So, yeah, there was a time in Japan when I was making some soba noodles, and the gentleman who was teaching us how to make soba noodles kept saying Saskatchewan, Saskatchewan, and I thought this was quite funny that he would know such a big word, and he was saying that because that's where the grain came from. to make the soba noodles. The shares trade on the Toronto Stock Exchange, CCO, and you can also buy it on the New York Stock Exchange, CCJ, depending on where you are located. So let's take a quick snapshot here at Cameco, based in Canada. The stock price, $25.61. It's not a small company. It's a mid-cap growth company. It's got a market cap of $11 billion. It's sitting smack bang in the middle of its 52-week range. My price in Canadian dollars actually is around $20 per share. And right now in Canadian dollars, it's trading at over $30 per share. So it's up nicely for me, but not nearly as nice as what it would have been if uranium got close to $100 instead of the $50 spot price where it's currently stuck. The PE ratio is ridiculous. So maybe this is not a stock that you necessarily just want to climb into, because the PE ratio of 154 is sort of 10 times greater than the average company on the S&P 500. So if you want to get into Cameco, you need to do a little bit of due diligence. And as I said, I got into Cameco a couple of years ago, and my cost basis in Canadian dollars is about $20. This is US dollars, 25.61. So right now it's kind of sitting pretty for me in terms of my cost basis, but you do not just want to jump in and buy this. It pays a small dividend, but you're not buying for its dividend, and it's 63% held by institutions, not too much short. And you can see the chart over here. The black line is Cameco, and you can see that it's actually been underperforming the indices. So it has not been a good couple of years for uranium investors, and this is over a 1-year period. The analyst price targets on this, so analysts, what do they say? Well, they expect Cameco to move from where it currently is at around $26 to around $37. It's a strong buy on tip ranks, with 5 of the analysts saying buy. Nobody says hold, nobody says sell. People are basically just saying you can buy Cameco. And you can see a couple of people who are quite highly regarded, 4.5 stars each. Raymond James and Canaccord Genuity both have target prices that are significantly higher than its current trading price. How does Cameco look compared to its peers? So in total debt to capital, most recent quarter, it's carrying a debt to capital of only 14.5. The industry is at 32 for the most recent quarter. And the quick ratio down here is very interesting too, almost 5. Now, you've heard me talk about quick ratios and current ratios quite often. So the quick ratio is how much cash do you have and what bills do you have to pay within the next 30 days, right? So you want it to be at least 1, right? I have as much cash as I require to pay all my bills within the next 30 days. That would be 1 to 1. So if it's 5 to 1, that means that Cameco is sitting on quite a lot of cash, and maybe they have too much cash. They should go and buy something, preferably GoviEx or Myriad Uranium. I'd like them to buy GoviEx because I own GoviEx, the uranium mine in Africa. So when we look at another way that you could possibly get into uranium, NuScale. So this is slightly different because Cameco is a uranium miner, but NuScale is actually a developer of small modular nuclear power reactors. These things are much more popular than what it seems, and many people have not even heard of it. But the small modular nuclear reactors literally allow you to put small power reactor stations almost anywhere, right? Because they don't take up a lot of real estate, they don't require a lot of infrastructure, because by definition, they are small. So you don't have to build all these massive nuclear power plants that we are used to, including the ones that effectively caused the problems for uranium in the first place, not only Fukushima, but even before that in that wonderful country of Ukraine, in Kiev, with Chernobyl. You know, these were bad news stories, and even though they are respectively, 30 years or 10 years old, they still impact the way people think today. Thinking of uranium as some scary thing, but meantime, uranium and nuclear energy is probably the safest, cleanest energy source that you can generate, and the most efficient at the same time. The business, so NuScale, started out as a university research project in 2002, so it's already 20 years old. And in 2020, it became the first company to have all its small modular reactor design approved by the Nuclear Regulatory Commission. It has several projects planned ahead. Notably, it will build a 6-module plant at the Idaho National Laboratory in Idaho Falls that will generate 462 megawatts of carbon-free electricity. The plant is expected to be fully operational by 2030. So there's a bit of a runway here. If you want to get into NuScale, you're going to have to be very patient and wait for a while. What does the stock look like? Well, you can buy it for $8.86, or under $10 per share. It is a small cap growth company. It's got a market cap of only $620 million. It's sitting way to the left on its 52-week range, so arguably it's cheap, but it might even become cheaper. Who knows, right? Timing the market is very, very difficult, but conversely, time in the market is much more valuable. You're not buying it for its positive earnings because it doesn't have any. You're not buying it for its PE ratio because it's running at a loss. You're not buying it for its dividend. You can see at the bottom of the screen here, there's a huge short interest on this stock. So people are expecting, a large number of people are expecting the stock to go much lower from where it is right now. So I don't know if you want to get into NuScale Power as a uranium play, maybe you want to buy it when it hits sort of $7.50 or thereabouts. And as you can see over the past 1 year, despite the fact that it had a nice spike last year in July, August, it pulled back, and now it is lagging the indices quite significantly, along with all the other uranium peers and related type companies. On TipRanks, it says it's a moderate buy, but I wouldn't put too much value or emphasis on the analyst consensus here because it's only one buy and one hold. So we don't have much to go by here. And as you can see, the opinion at the bottom of the screen is a bit mixed, right? So you have a $9 low and a $14.50 high. If we look at the company, though, and I looked at the snapshot here, it says SMR, so that's its ticker symbol, small modular reactor, has little or no debt and thus little financial risk. The debt to capital ratio is 0. The industry, as I said with Cameco just a minute ago, is about 36. And then the quick ratio down here was slightly confusing to me because how can you have a quick ratio with ... that shouldn't be the case at all. So what I thought I would do is take a quick look at the balance sheet. And when you do look at the balance sheet for this, as of 2022, so this is at the end of December of 2022, they had $267 million cash and short-term investments on hand. And at the bottom, total current liabilities of only $38 million. So they are in a very strong cash position. And the reason why I'm highlighting this is because companies that have money very seldom go out of business, right? Companies that have too much debt go out of business easily. Companies that have a lot of money generally only go out of business because the owner decides to exit or because the company decides to merge with another company or something like that. But companies with money don't go broke, right? They don't go out of business. And when you have $267 million, almost $268 million worth of cash, and only $38 million worth of debt, short-term debt, you're okay. And look right at the bottom, total long-term debt, 0. So this is actually a pretty strong balance sheet. Another way that you can get into uranium is to buy an ETF. Now, an ETF, for those of you who don't know, is an exchange-traded fund, which means it's an index or a portfolio of stocks, right? You can build your own portfolio of stocks, and then you can call that your personal little ETF, right? Except you won't be able to trade it as an ETF because an ETF trades as one thing, not 10. So for example, if you own an energy ETF like XLE, it is made up of the sum total of parts, which is Chevron, Exxon, and some other companies. You can look at the top 10 holdings and you can say, I'm just going to duplicate this and replicate it for myself, but then you're buying single stocks. And if you own Exxon, Chevron, and 10 other companies, and those companies do well, that's great. And if they do badly collectively, then the entire energy sector is down. But if one of them crashes and tanks, like for instance, Devon recently with its first quarter results, dropped 15% or 12% on the day of the report, their earnings report, and the next day went down another 2 or 3%, so almost 15% in 2 days, right? So if you hold an ETF, you get a bit of risk mitigation because you're holding a variety of different stocks in an index of stocks, but you're only buying the ETF instead of the single stock, so you eliminate some of the single stock risk. And of course, you can use an ETF to tap into the nuclear energy too, and this one's called VanEck. The VanEck Uranium plus Nuclear Energy ETF, the ticker symbol NLR, is an ETF that tracks the performance of companies involved in uranium, mining, construction, engineering, etc. And it's made up of 24 different uranium and nuclear energy stocks. So let's take a quick look at this snapshot here. You can buy it for $55. You need to know that an ETF has an expense ratio because behind the curtain, there's a little dude sitting there who's managing the stocks for you. And because he's managing the stocks that they hold in the portfolio, like I just said on the previous slide, they have 24 stocks. So because this little dude behind the curtain is managing those 24 stocks for you, he needs to be paid a salary and he needs to make a few $1 million per year. So you have an expense ratio on this particular ETF of almost 1%. So whatever you invest, you immediately lose 1% straight off the bat. However, it does pay a dividend, and it has a distribution yield of almost 2%. So you can say, well, that's a wash, because even though I'm losing 1% right away, I'm actually making 2% on the other side of the ledger. So I'm actually up anyway 1%. Now, that depends on the stock price, obviously, because on a day like today, the stock price dropped 1%. So now it's a wash, right? See where I'm going? There's not enough of a hedge here in terms of risk mitigation. The only risk mitigation that you have is the fact that the whole 24 stocks instead of one, so you don't have single stock risk. When you look at the 52-week range, it's sitting just to the right-hand side of the midpoint. And right now, it's literally in the middle of $50 and $60, so around 55. Who knows where it's going to go? I don't know. Morningstar here on the bottom right says it's a below average risk stock, but its return is also low. So if you're comfortable with a low return, but you do want to get a uranium play, and you're also comfortable with below average risk, which might be the primary reason why you want to buy the ETF, then you can get yourself some of this one. Now, why am I showing you this chart here? BWX Technologies trading at $64. If volatility is your friend, you'll like this one. Over the past 5 years, it's been up and down and up and down. And if you draw a flat line, you probably went nowhere over 5 years, because 5 years ago, it was at around $70. Then it dipped in 2019 to below $40. And if you draw a straight line through here, you probably end up at about $65, which is where the stock is currently trading. But why am I showing you BWX Technologies Inc.? The reason for that is that in the Van Eck ETF, BWXT is their top holding. They have almost 10% of their holdings in BWXT. And then their second largest holding is Cameco, which I covered in this presentation for you. So you need to probably, if you want to buy an ETF like this, you need to know what's in it. The same way I use the example of the XLE Energy Index, which is 20% Exxon, 20% Chevron, that's 40%. And then about 7, 8, 9% of 8 other top energy performers in the United States. So the top 10 for XLE is all like stellar stuff. It's good stuff, right? I'd buy XLE any day before I buy a Van Eck, but I just wanted to give you a couple of ideas as to how you could possibly invest in uranium. The only stock that I hold that I've covered in this video is Cameco. I've had it for quite some time, and I like it in terms of where it is right now. And that's also why I'm holding it. Just very briefly, a lot of people talk about renewable energy. And of course, many people are much more familiar with photovoltaic energy than what I am. We're talking here specifically solar panels. Wind power has been a sort of semi-disaster. Certainly for investors, it's been horrible. But so is solar. Anything renewable has been pretty much horrible from an investment point of view. Biomass is just burning trees, so that's a terrible idea as well. But why nuclear beats solar power? So I'll just pause here on the slide for a few minutes, because you can kind of look through it at your leisure. But the green arrow that I added here is it uses 75 times less land. This is just absolutely horrible. If you are a green-minded person who wants to save the environment by going to solar instead of fossil fuels, then you need to be aware and at least be cognizant of the environmental disaster, which is solar panels. This previously was greenfield, brimming with wildlife, flowers, plants, all kinds of things. And they cut down the trees to put solar panels in. What is that song, like? They cut down the trees to put up a parking lot. This is almost the same kind of thing here. It is just horrible. I cannot imagine how anybody can look at a picture like this and say, well, I am an environmentally conscious person and I'm using the sun to harvest energy instead of fossil fuels. Fossil fuels at worst is a hole in the ground, right? It's almost like a mining company. It's a hole in the ground. A small modular nuclear reaction will take up a footprint smaller than that little square there in the middle of this picture. This is just horrible, and maybe that's just my opinion, and you love it. If you do, you can tell me why. But this is sort of a snapshot as to why nuclear beats solar power. So guys, that's sort of a wrap on this one, because I did want to talk a little bit about how you could possibly get into nuclear. 2 years ago, so when I first bought some uranium stocks, a couple of people mentioned to me that the only stock that you should really buy is Kazatomprom because it's a state-owned company out of Kazakhstan, and it's kind of like a safe bet. Yeah, nothing is safe. Then riots broke out, and there was political upheaval in Kazakhstan or whatever. So I'm kind of glad I went with Cameco anyway, which was my second choice, and I'm still long in it today. I do own some other uranium holdings. I mentioned a couple during the presentation. I talked about GoviX. I have a position in GoviX uranium as well. I also own Paladin. Paladin is a uranium mine out of Namibia, which is in southern Africa. So just north of South Africa on the west coast of Africa. So I have Paladin as well, and I still hold that. So I am invested in uranium and nuclear for what it's worth, and we'll have to see where it goes. What I can tell you from a personal point of view is that 2 years ago, when I first got into uranium, and the spot price was sort of in the mid to high $20 range, I would have expected 2 years ago for it to just absolutely take off like a rocket, to 70, 80, 90, even $100 instead of the $50 spot price where it's trading right now. It didn't materialize. Will it? I'm not sure. It is clean. It is safe. It is efficient. It is low cost in the greater scheme of things. So I'm not sure why the sort of green energy movement has not gone more towards uranium and nuclear as opposed to going towards renewables like wind and solar and biomass, which are arguably have been proven certainly not to be very efficient and absolutely horrible from an investment point of view. I'm speaking primarily from an investment point of view. I have some thoughts and opinions on green energy. And anyway, I've shared them from time to time, so you kind of know where I'm standing or where I'm coming from. But I'm more interested in what you think. So let me know if you've had time to watch this video. Tell me what you think in the comments, and let's get a conversation going. Talk to you soon. Bye-bye.